I mean, to be honest, look at the carnage, and what they said was, maybe 100, 150 basis points less growth for them. I mean, this is really shocking because they talked about Iran, they talked about projects being pushed out into next year and so forth. And this goes into the, thesis that you just repeated, because at the end of the day, if you're going to spend money, if an enterprise or if a corporation is going to spend money on AI, where is that money going to come from? You don't have budgets that are going to go up 50, 100%. You're going to take it out from the software bucket. You're going to take it out from consulting bucket. You may not upgrade your PC. I mean, it has to come from somewhere, and that's what we are seeing right now.
It has to come from somewhere, and if it's coming from software, it's coming from consulting. Does that mean that the companies realize that they can get by just fine without these consultants and they'll never need to go back to them? Or do the consultants become something that they just go to as needed on an emergency basis?
So again, over the last 25 years, we have seen this movie many times. It leads to a year or so of anemic spending, and then it bounces back very strongly. The reason it bounces back is because you cannot put those projects on hold forever. You need your data cleaned up, you need your software systems upgraded, all of those things. The thing that I was surprised by in the Accenture earnings today is their headcount still went up. I mean, if there was massive AI disruption going on in that company, why would these guys hire any more people? A company like Accenture has over 700,000 people. Their attrition rate is about 14%, which means all they have to do is not hire, and their headcount goes from 700,000 plus to, let's say, 600,000, which is what you would expect when somebody is being disrupted by AI. This is a classic case of traditional spending not being strong and these guys getting punished on it.
You mentioned software is another area that's under pressure. And again, you look at Salesforce, some of these names that are down 40, 50%. How's the thinking on Wall Street kind of evolving here, Anurag, about software broadly defined as it relates in an AI world?
The thinking is very simple right now. Trading is led by short-term focused, you could say investors or speculators, and the trade is very simple. They understand 100% go long semis and get out of anything that is software or services related. We already heard yesterday from even Apple that memory prices are up, and so Micron is up again, on that stuff. So it's a very easy trade for people to see. They can't see by what's going to happen in 3 years to software companies or consulting companies. Why bother being in it when the trade is very simple in front of you? Google is raising capital to invest more in AI infrastructure. Let's stick with the semi trade. Let's stick with the AI infrastructure trade.
Anurag, we got news this week that Medallia, which is a private equity-backed software firm, is being taken over by creditors led by Blackstone. Thoma Bravo, its sponsor, said it wasn't going to inject fresh cash into the company. Does this spill over in any way to the public market?
So this has been a story for, I would say not just right now, but for decades. When software companies lose their market share or are smaller, they actually go to private equity, they raise debt, and that's how they exist. Our argument is companies with leading market share, companies like ServiceNow, companies like Workday, companies like SAP, they're still growing and they have a commanding market share in their area. Somebody like a Medallia are honestly a blip when it comes to the market share of the entire software landscape. So it's not surprising those companies that are private, they are not growing, they're, a lot of debt. You will see a lot more issues on that spectrum. For our side, when we look at the larger companies, I think this risk is insulated from them.
Understood that, the big software companies are a class unto themselves. But if we're not seeing these software companies see their valuations adjusted, meaning their owners are not marking down the value of these companies, when they eventually do, does that have any unintended consequences on the publicly traded part of the software industry, even if it's not the big names, maybe some of the mid-cap ones?
Yeah, they will all be getting butchered. I mean, you can even see today they're getting clobbered because of Accenture, because the whole risk is anytime you have a company at this point that is not semis related or hardware related and has to do with human capital, people just say, find an easy way to say, what, they are going to get disrupted. This is not a business I want to be in. I would rather stick around to something that's tied up with chips or servers.
I remember when, not so long ago, everyone wanted to be in software because you didn't want to be in hardware. Hardware was a commodity business, right? No chip companies, no big mainframe computers or anything like that. Let's go into software, recurring revenue.
Yep, exactly. Recurring revenue. That was definitely the key. Hey, so
look at Accenture for that matter.
Yeah,
right now.
exactly.
It's about what, 12-13% free cash flow yield. I've never seen that, at least in the 23 years I've covered Accenture.
Let's switch gears real quick. Intel shares soar after Trump says it has struck a deal with Apple for a chip deal. What's going on there?
Yeah, we'll have to find out whether it actually happened or not, because I haven't seen the release from the companies at this point. Now, the question here is, Apple does make its own chip. It goes to TSMC to get them made, and then those has their custom chips have been a big story of selling their Macs and their phones. Now, if they are getting a little bit of, you could say, backlog issues because TSMC is really busy doing AI chips, they could go to Intel. But the big question, which I don't know the answer for, is can Intel even manufacture the chips for Apple at this point? Because this is not something that you could just, it's not like construction. You can find another vendor. You need to have that technology and those nodes in order to fulfill the demand from some of the leading tech companies like Apple.
Yeah, to Anurag's point, Intel declined to comment. Apple did not comment as well. But, that's to be fair. Okay. Now, Intel, of course, has this deal with the White House, very quickly here, Anurag, where the U.S. government is the biggest investor. So even if it's not a lot of chips, just a symbolic amount says something to the market, doesn't it?
Yeah, but that's the case. But that's also could be just driven by market forces right now. We really are in a crunch that you can't get enough semis and chips out in the market, given the AI infrastructure demand. So they will go anywhere they can find chips at this point.